Hey everybody, Economic Ninja here. I hope you're doing well. I want to get this video out before the stock market opens today, July 11th, because I want to give you my CPI prediction beforehand. A lot of people like to talk just about the news and what's happening or happened. I want to talk about what's coming in the future, all right? And I could be totally wrong, but I'm willing to stake a little bit of reputation on this. So, the video is entitled Stock Market Alert or Crash Alert, right? And the reason why is because that's the story I'm about to read to you. And then we're going to talk about what I believe you're going to see in the next few months with inflation. This story comes out of investorplace.com. It says Stock Market Crash Alert. Mark your calendars for July 11th. There's a lot of things happening on July 11th. I'm pretty sure the last president is being sentenced today as well. But this is specifically about the CPI. It says here, stock market crash fears are swirling ahead of the crucial June Consumer Price Index, or CPI, report due this Thursday, July 11th. With the chances of a rate cut still up in the air, the long-awaited inflation readings should offer some clarity into the Federal Reserve's path forward. So let me stop and say that a lot of Wall Street has dismissed pretty much any rate cuts, possibly one, if anything, the rest of this year. I have been on record in type 1, if you remember, I've been on record this entire, for the last 8 to 9 months, stating that the Federal Reserve will lower rates a couple of times, 25 basis point cuts right before the election. And what they're going to do is they're going to cite some really positive news that things are getting better. And, they're going to keep saying we're data dependent, things like that, but things are going to get better. The reason why is because they want you to believe that Bidenomics has won. All right. It is going to be a nothing burger when it comes to mortgage rates. Sure, you'll see the 10-year dip just a little bit, but then what bond traders will do is they'll figure out, whoa. We want more interest because there's this drop will cause more inflation because it will cause more speculation in markets, right? People will start to think for just a short period of time, things are getting better. Everything's great. Let's dive in. And it will cause prices to rise a little bit in the stock. It will rise in the stock market. It will rise a little bit in housing prices. But again, this will be at the lowest tier of value and it will be very, very short lived. On top of that, you will see that other countries will become very fearful of holding US assets because they know that the end is nigh. And remember, this is a political move. Everything will change right after the election. Okay? Now it says here, back to the story, investors and economists have been chomping at the bit for a rate cut this year, so far to no avail. Stubborn inflation and relatively tight labor market has pushed the Fed towards holding rates steady until they deem inflation better managed. Now remember, everybody's watching that 2% rate, the Federal Reserve's stance on inflation. They want inflation at 2%. Little trivia. Do you know what country started the 2% inflation? Go ahead and answer it down below. It says here, we've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably towards 2%. And this comes from the Fed chairman, Jerome Powell, at the June Federal Open Market Committee meeting. As such, this week's CPI report may provide or prove crucial to the central bank's monetary objectives, heading into its next two policy meetings set for July 1st and September 18th. Now, the answer to that question, what country started that? It was New Zealand. I always say it wrong. I slur a little bit. But hey, it's 4 in the morning over here, or 4:30. It's almost 5. Point being is that July and September are very important because I do not believe you're going to see this cut coming in July. I believe personally you're going to see it in August. The reason why is if they cut rates 25 basis points in August and in September, that is right before the election. Everything will be heating up, everything will be getting exciting. And those two, I'd be shocked if they did 3, but you never know, because if they did 3 25 point basis cuts 1 month after another, that data will hit by 90 days. We're going to see what the numbers do, and that will cause more inflation. So I believe you're going to see two rate cuts, September and October, going into November, because by the time the elections start, the data won't be clear enough. It won't be strong enough to show that they actually caused inflation. And then what they're going to do is an about face, and it will blow your mind how high interest rates go. Now, this is exciting for me because I like to project these things based off of past events. And since 1972, this has happened, four times. I'm like, oh, four times where the Fed has lowered rates right before an election and in the middle of a large rate hiking cycle. If you want to go back to 1979 and go look at the Fed chart, it'll blow your mind. And again, it says here, on a monthly basis, this is actually hotter than May's CPI print. Actually, let me dive back in. The CPI is expected to climb 0.07 in June, reflecting an annual inflation rate of 3.12 per the Cleveland Fed's nowcasting tool. On a monthly basis, this would be hotter than May's CPI print. I believe it's going to come in hotter, but below this tool, this analytical tool that they use. So if they're expecting 0.07, I would dare bet it comes in at 0.03, 0.04, and they'll go, this is better. Remember, bad news is good news in this market. Like, let me ask you this honestly. Type 3, if you get super pumped watching this market, watching things melt down, you've tried warning your friends and family, they don't want to listen, and you're sitting on the sidelines just like with bated breath. If you're typing 3, you're experiencing what I was experiencing back in 2014 through 2018 when I was preparing, then moving into cryptocurrencies, putting my money in assets that I knew were going to rise when this inflation moved up. And it is an exciting place to be. Being patient is tough at times, but it's a good place to be because sometimes, type 4, if you know what I mean, it's sometimes better not to make a decision in haste and wait, even if you miss a small opportunity, because the gamble is too great. And that's what a lot of people need to learn in our country and around the world is how to take a step back, breathe a little bit, watch what's going on, but really get that big picture, that macro picture. Remember, nothing has changed. Countries are walking away from the dollar. They're actively joining a campaign called the BRICS nations, building a new joint currency. They're buying gold hand over fist. They're making new trade agreements, while America is not buying gold. They are putting it down. They are starting wars all around the world, and they are being viewed as bullies. This is a big deal. Yet, most of our family and friends only want to talk about a soccer game or a baseball game. Hope you got something out of this. I wanted to put out my call for the CPI ahead of time because I don't like reporting what happened in the past. I want to talk about what's coming in the future. That being said, the Economic Ninja is out.